Good afternoon, everybody. It's a pleasure to have you on today. We are here to discuss the RegTech ecosystem and the state of the RegTech in the world, essentially. And I have a fantastic panel that I'm going to present in a second. So we have Costantino Mariella, which is a senior VC investment manager at Sony Venture Corporation. We have Steve Berg, partner at Lytical Ventures from the US. We have Vasile Foca, co-founder and managing partner of Talis Capital. And also we have Jay Likhoded. I can never pronounce your surname. I'm terrible. CEO and founder of Clausematch. And, I'm Donatella Calegaris. I'm a co-managing partner of Flashpoint Venture Debt. So shall we start by have a quick 5 minutes introduction about yourself, guys, and then I'm going to summarize what we're trying to achieve today, and then we dive into some interesting questions. Shall we start with Vasile? I go on.
Yes. Hi, Donatella. Hi to you all. Exciting to be on this sort of RegTech panel. I think this has been a regular event organized by Clausematch. Thanks, Jay, for organizing all that. I think 2 words about me, co-founder of Talis Capital. This is a venture fund out of London. We're journalists. We invest in seed and Series A as the first ticket. We have a portfolio of 60 companies, 2/3 in the UK and in Europe, and 1/3 in the US, spread across multiple sort of industries, including RegTech and compliance tech, which we'll be discussing today a lot.
Okay, shall we go from to Costa and then Steve and then obviously Jay? We need to hear from you as well.
Thanks, Donatella. My name is Costantino Mariella. I work in the Sony Innovation Fund. We currently manage 2 different funds internally. One is an internal vehicle for investments at this stage, and the second one is a multi-LP fund where we invest in the growth stage opportunities. Being Sony, we span across a lot of different focus areas, from deep tech, semiconductor, all the way to entertainment. FinTech, InsurTech is one of the key areas. People are surprised to know this, being Sony, but we have very strong financial holdings in Japan, where we have insurance, banks, etc. So that's why the interest in FinTech and InsurTech. And for us, RegTech falls into this category with the AML, KYC, etc., etc. So we are active in this area. We have in total around 150 portfolio companies worldwide. We invest in Europe, US, India, and Japan. And as I said, we span across so many different focus areas, trying to mirror what Sony does.
Thank you, Costa. Steve, please tell us about yourself.
Thanks, Donatella. My name is Steve Berg. I'm a partner at Lytical Ventures. Lytical, also early stage, mostly Series A, a little bit before that as well. Our focus is on something we call enterprise intelligence. And what we mean by that is that, companies, enterprises right now, whether they like it or not, have a responsibility to their data. Today you have to save your data, you have to secure your data, you have to figure out how to monetize your data. You have to turn knowledge into wisdom based on that data for the benefit of your company. And when you think about the securing of what you think about is, in part, you have to GRC, governance, risk, and compliance. And that's the RegTech umbrella for us, right? When we think of the significance of that, and frankly, I think of it as the starting point. Without fully understanding what your risk is and what your governance policy is, how can you decide what else you need? So it's significant to us. So I appreciate the opportunity to talk about it today.
Thank you, Steve. Jay, over to you.
Great. Thanks, Donatella, and thanks everyone for being here. Almost like a board meeting with all investors here in Clausematch. But yeah, it's great. It's great to see everyone. I am CEO and founder of Clausematch. Clausematch helps companies to operate safely and meet their compliance obligations. I started the company 10 years ago. We celebrated 10 years this year. And we serve some of the most well-recognized financial institutions, but also asset managers, insurance companies, fintech and payments companies, specifically in the compliance and regulatory field. And we help companies with streamlining their policies, procedures, aligning them with obligations and regulations, and communicating that to employees in all one central way.
Thank you, Jay. Okay, so let's kickstart this interesting discussion. So we know that there've been quite a number of RegTech companies that raised more than 80 billion in 2021, and which has doubled to more than. Yeah, I think I nearly doubled in 2020. So I think that despite that there's been a visible slowdown due to the current macroeconomics, I think we can see that the RegTech companies remain strong, and they will continue to raise capital in 2022. I think we also have, I'm going to leave the panel to discuss the latest companies that we know that raise quite a lot of capital in this ecosystem. And I would rather go straight into the questions for you guys. So the first question that we have is what do we mean when we talk about RegTech? And I think I would like to leave the floor to Vasile, and then we can sort of combine with the other panelists to see how they, if they agree, disagree, or they.
Thank you, Donatella. Yeah, I think you're right. I think the RegTech definition. There are quite a few in the market, and originally RegTech coined, RegTech first was coined by actually UK FCA 7 years ago, and they call it a subset of fintech that focuses on technologies that facilitate and delivery of the regulatory requirements more efficiently than existing capabilities. So basically, in simple terms, they were referring to technology to ensure companies can comply with their regulatory requirements. Because of that, there is this fintech and RegTech often considered to be one of the same, or RegTech is a subset of the fintech. In fact, that they are similar, they have quite different focuses, and their focuses entirely different. Fintech is focused on embedded technology and software for the financial services, while the RegTech is focused on the technologies to address complex data and information requirements in this regulatory compliance. So when people are discussing RegTech, they predominantly are referring to the KYC or compliance monitoring or regulatory monitoring, anti-money laundering procedures, tracking and reporting. We at Talis look at it in the wider domain, and I think if you look at the various RegTech market mapping has been provided by various consultancies. For example, we put, for example, cybersecurity under the RegTech umbrella. We put some of the ID verification, fraud detection solutions into the RegTech umbrella as well. Just because how we look into that space is that the data that is related to the consumer or the clients has to be managed, secured. People need to think about privacy. All of that is ensuring it's not just the AML, KYC, or compliance. There are much wider tooling required in that space. Also, there is a huge shift in the last 3-4 years that has been taking place. So before, people will look at the consumer protection. Now, the current model safeguards the client, their data rather than the clients themselves. So it's now the shift is completely pushing on the data protection rather than just consumer protection in that sense. Before, people were talking about capital regulation. Now they're talking about algorithm sandboxing. Before, they were talking about reporting compliance. Now they're talking about API compliance. This technology is not standing still. So because of that, the network and the types of companies that fit into that RegTech environment is actually growing.
I think it was a period of time that everything was falling into fintech, right? You remember, at least like...
Yeah. No, it's still, if you look at the fintech mapping,
everything was fintech. Yeah. So I'm actually glad to hear from you that is becoming, the segmentation is actually happening, because I totally agree with you in the way you segmented the RegTech, and hopefully Jay would agree particularly. And do you have anything to add, Costa and Steve?
I completely agree with Vasile. I think it's kind of misleading to put the RegTech only under the fintech umbrella, because there are a lot of other things where regulation and compliance is actually key. Now, more and more also ESG regulations come into play. So lots of companies that are not in the financial sector, they will need to comply with ESG regulations, data and privacy, even healthcare companies with all the access to virtual consultation. They handle a lot of sensitive data, so they will need to comply with a lot of regulations. And these things are changing almost on a daily basis. So that's the cost of big companies to comply with this, and that's why the RegTech is very interesting, because there is a massive opportunity. But I completely agree that looking only at KYC AML is very reductive, even though this is attracting quite a lot of money into that space. But RegTech is definitely bigger than that.
Yeah, I mean, I guess what I would pick up on is you mentioned that there's a bunch of things that have slowed down, and certainly I think cybersecurity, RegTech probably slowed down a little bit as well, but certainly not as much. And you kind of wonder why that is, right? And I think it's as we look, if you put RegTech under the umbrella, at least partially under the umbrella of cybersecurity, you think to yourself, well, good economy, bad economy, people don't stop hacking into things, right? You're still required to prove to regulators that you're complying with policy, right? Yeah, you still have to do this. And so, when I think about, why wouldn't something like this be off as much? Well, I kind of think about it based on how I bucket it, and we're not necessarily a fintech per se. We're more of a data, cyber, ML type of a shop, and when we think about that as kind of business essential, right? And so my definition is kind of allowing for my world, and the reason why I think that this is happening.
Yeah, compliance is not optional, so you need to have it. So
yeah. I mean, if you ask me, I think compliance is eating the world, but I'm sure Jay must love that.
Yeah,
that's right.
We have seen a big shift in the recent couple of years, even. Purely from our point of view as well. We're a company which is selling software to financial institutions, and initially our compliance program was cybersecurity and how we comply with certain cybersecurity standards and data privacy standards, and requirements. But later on, they want to know all about our suppliers, and in the last 12 months, we're getting questions around our ESG compliance. So our compliance program internally for a 70-people company has grown from just one person managing it to now a lot of people involved in managing compliance documentation and having to provide the evidence that we're compliant to our customers. So and that is happening with every company that is touching data, storing data, every company that is dealing with large organizations, they have to expand their compliance programs to deal with these new compliance regulations. A more recent one, we now have to prove that our model in our machine learning and natural language processing activities is compliant with regulations which are applicable to banks. So that is another big part of what we have to comply with, and even tech team is now involved in compliance that we have to manage.
Yeah, this is what the state of the world is going, and I personally think the ESG is here to stay. So it's not going anywhere. It's going to be just more of it, and more making sure that we tick the box there, I think. So shall we explore? So what do you think are the new thing of interest from the venture side in RegTech? What are the trends, the shift you see in the market that you think will attract more funding? Actually, I think probably we can flow from what has been just discussed, actually, to answer this question. And also how it has changed compared to last year, considering the macroeconomics. Who would like to take this?
I can start, and then the other one can chip in. So, of course, things that changed in the market have been quite a few, like COVID-19, even though we try to forget it, but still happened. That has brought a lot of change in how people work and live, and this has taken companies to reassess, apologies for the background noise, HR management and risk and compliance processes, and plus all the cost pressure to reduce this sort of costs. So this has definitely have an impact on the importance of the RegTech. And then what we're seeing is big investments, even though we say that RegTech is beyond that financial, but the regulation in payment systems and processes is becoming very, very important. The Ukraine war has created a lot more pressure against fraud, against money laundering, etc. And everyone needs to be very careful and compliant with the stringent regulation. So this is fueling a lot of new investments in a RegTech. People maybe were not actively investing, but it is creating a lot of interest, that's for sure. And then an effect of COVID has been, as I said also before, the health tech. Health tech is becoming probably a very good example of what COVID has created. So lots of telemedicine, lots of virtual consultations, and companies have amassed a lot of data, and they will need to actually process this data in a very compliant way. So that's what I think the micro events that I can pinpoint from a very high level point of view.
Thank you, Costa.
I just can add a few things. So I think for the last 2 years in particular, what we were saying is, we call it, I think, well, maybe there's a term we've seen in the market, regulatory earthquake taking place. I think there is second legislation framework for MiFID II, GDPR being sort of heavily enforced, second payment services directive, the fourth whatever directive for money laundering. There's ongoing. So think about, there are 750 regulators globally. And the usual compliance manager is getting 6,000 alerts in a large company every month. It's unmanageable. And of course, if you're not complying, I think there was like 320 billion in misconduct paid since 2010 by the organizations, because you can't really fulfill that. And this snowball will only get bigger. So I think the only way to deal with that cost is actually to onboard all the new solutions that are addressing the artificial intelligence, machine learning techniques, something that is already using embedded compliance as a solution, and to control the costs, make it effective. So you free that the time, people's time and resources to actually other more serious problems that exist in the market. So I think we will see more and more on that coming. So another big trend, which again we also see in the last particular 2 years, the huge growth in the crypto market. So there is a lot of regulation and compliance that start coming into that space because the number of users grew exponentially. I think the trend will continue for the next 10 years, even the market tanked in 2022. This is another trend which will grow tangibly. And another big one which we're seeing is also the solutions that compliance and RegTech that addressing supply chain flows. Again, we've seen what the war in Ukraine brought to the market. There's almost like decoupling of the usual transactions that we see in the market. There is a lot of compliance that now required to track certain cargoes, where the data sits. So even, for example, containers now became sort of smart containers tagged with the data device. And the question is, who's collecting the data, where the data sits, how's compliance? There's a lot of regulation on that side coming. So I think more and more we'll see this almost across every sector.
Yeah, the only thing I would add is the macro trend. The macro trend is over the last couple of years, the world has thought less in terms of globalization and more about nationalization. And each country has its own set of rules and regulations. And if you're an enterprise and you need to do business in multiple countries, meaning that you have to pay attention to multiple sets of rules and you have to be able to keep track of that and again stay in compliance with the policies that you set forward, again, you just really don't have a choice, right? You just have to continue to invest in the infrastructure that allows you to do business multinationally, assuming that you're there.
Okay, this is Steve. This is actually very interesting, and thank you, Vasile. I like your angle on logistic, which I didn't actually think, and it's quite interesting and relevant. Steve, you actually lead me to my next question, and there was what the economic macroeconomic crisis has influenced and affect the investment in RegTech, and we hear from Vasile some trends there, which I think is probably, as you mentioned, if I'm not mistaken, is definitely coming from the macroeconomic challenges. Anything else that you think would sort of have receive a push in because the situation we're living in the world right now?
Well, I mean, I think RegTech or not RegTech, when economic cycles happen, there's a behavioral psychology to it, right? The first thing you do is you slow down. You assess. The second thing you do is you kind of think about how much risk am I assuming? What types of risks am I assuming? That tends to cause a vicious cycle, right? Slow down your investment means slow down of the company's ability to spend capital, which means a slowdown in their growth, which means a slowdown or a compression in the valuation that you can assign them, which makes you less likely to want to invest. And so that is just normal kind of human behavior. And certain parts of the world experience it a little bit more dramatically than other parts of the world. Typically when I look from west to east, and I'm going to choose the west coast of the United States to Europe as my eastern point in this particular case, the West Coast folks in general, they want to dent the world. Valuations don't matter. We're going to, we care about growth and we want to pay for growth. And then when we get to the East Coast, well, they've got a Wall Street bent and the time value of money starts to come into play a little bit more. And so, the valuations and what they're willing to pay is a little bit less. At the moment in Europe, with particularly what's happened in the UK, has caused even more, and I'm going to call it completely natural, slowdown, concern, assessment of risk, and valuations broadly are even more compressed than they typically would be even on the East Coast in an environment like this. And so, we can talk about why certain companies kind of buck that trend. And we hinted on the notion that you can't invest less in compliance with policy. You can't invest less in stopping people from stealing your PII or hacking your applications. You can't. You don't have a choice. And so, some companies in the RegTech space is, certainly taken the opportunity to benefit that. And, if the companies have the mentality, hey, look, we've got 12 months or 18 months of runway, and we think that that is enough to outrun the current economic cycle, well, maybe their behavior should be to continue as if nothing has really changed, to reel in the rope, to take market share while they can. On the other hand, if somebody's a little bit short and they're thinking to themselves, well, heck, my job is to keep my company alive, right? Well, then maybe they're going to slow down how fast they put out capital, how much burn they take at a particular time. But
if it's a very good company, Steve, they just use venture debt.
So if everyone were like you and you had the faith, right, that ultimately, Jay said that he's been in business for 10 years, and it's likely that Jay will be in business for many more years before that company finds an exit. Everybody.
Sorry, Steve, I couldn't resist the sales bit.
Look, if people can break out of the mindset of, hey, look, for 18 months I need to draw in. There are amazing opportunities, right? To be aggressive, to be proactive. But it's not normal. I'm just saying it's not normal human behavior that's driving or it is normal human behavior that's driving what's happening right now.
So let me see if I understand the sort of juice of the message that you're trying to put across. So basically, you think that it's mainly it's not really related to the RegTech, but it's actually it's across the board, because obviously valuation were sort of inflated, if I may use the word without my VC colleagues killing me, and therefore it's just an adjustment, and that is across the board and not necessarily only and exclusively for this RegTech segment. Then that by the way, we expand quite a bit. Then I love it.
What I'm saying is there's a broad-based behavior, and then there's exceptions to that behavior based on certain things that are immutable. And, RegTech policy compliance is immutable. Protecting your PII is immutable. And so people will continue to spend on that. So maybe margins don't compress as much there, but it's natural in a recessionary environment or even in an inflationary environment for people to reassess the amount of risk that they're taking and assign a commensurate value with that.
Yeah, I agree. Anything to add, guys? To add to the particular trends that we will or should spot in the RegTech ecosystem due to the macroeconomic crisis? Anything to add to what Steve?
No, I think that overall, I think that the resilience of the RegTech will keep showing up, because as Steve and Vasile has said, you can't really go away from that. It's not a nice to have. You need to have it, and I think the number of deals and the amount of money invested in the first half of 2022 is broadly in line with what we've seen in the first half of 2021, and that's actually quite interesting, meaning that people are not taking a defensive position. They keep investing in this space, and it's probably one of the few spaces where there is the same amount of activities in VC, private equity, and M&A in the broader market. So it's quite reassuring, to be honest. Yeah.
That's good. It's good that we're doing this panel now. Then perfect. And Jay, do you see anything from the other side, from the side of, I don't know, what's happened with competitors, new guys popping up, and anything, changes, anything that you would like to add, that you disagree or you agree from what has been said?
Whoops. Jay, there you go.
Trying to speak on mute. I would say what we're seeing is that actually, when fundraising in the compliance and RegTech space, there is so much more demand than some of the other companies which which are not in this space, purely because of that thesis that a lot of investors have, that in a macroeconomic slowdown, compliance is not optional. So which companies are going to continue to perform are the companies which are addressing compliance or something that is not optional. We have seen also quite a lot of kind of early signs of consolidation and M&A happening in compliance space. It's been happening over the last couple of years. There are big players buying and acquiring companies in compliance space, but also there has been significant growth of GRC, new GRC vendors on the market. So I think it's been interesting to watch, and just speaking to investors, we've never had so much demand in a round of investments as we have now, as we've got round open.
And it's lovely, isn't it? And so it's good. It's good. I mean, we're all happy, obviously, in our little mini board meeting. No, I'm joking. No, I mean, jokes aside, I think it's excellent, and it'd be good to understand also from Vasile, Costa, and Steve, if you also saw this trend of M&A and acquisition sort of vibes to consolidate the market in the RegTech segment and the surroundings. I mean, what Jay said is very encouraging, and I'm happy he's experiencing all these sort of good vibes and exciting.
Yeah, well,
I'm happy to put my hand up, but I can also wait.
Go ahead, Steve.
So I think that what ends up happening in a consolidation time is based on the success that has come before it and the amount of capital that are on the balance sheets of the acquirers. And coming off of let's call it a 10-year, which is as prolonged as ever, cycle of generating capital, these companies have a lot of cash on their balance sheet. And I think then what happens is it really goes in two stages. The first stage of it is like, okay, what can I grab up? What kind of company that just doesn't have enough cash on their balance sheet that might be concerned about weathering the storm that I can get relatively inexpensively? The second cycle is, well, coming out of this, I've got to reaccelerate my growth, right? And so I need more things to put through my channel. I think I need more things to sell. I need things that work together. I need a more complete solution. And so that second stage tends to be where valuations expand back out. And frankly, a lot of public markets then take their valuation cues from prices that deals were done. And then private markets take their cues from those public market valuations as well, right? And so, I think we're probably still in that first, like, hey, let's see, who really needs to sell their company stage. But I think that, as soon as there's some decent signs that things are comfortable or doing marginally better as opposed to doing flat or down, you see that second stage start to happen.
Costa, you were about to say something on the same line, right?
Yeah, just seconding what Steve said. So we're seeing opportunities of big companies to acquire RegTech, for example, Nasdaq or Mastercard. They bought quite a lot of. They've been quite active in this space, buying fraud detection, AML type of solutions. We've seen consolidation at sometimes at the startup level, when companies they take the opportunity to acquire smaller complementary solutions. So I think it's both an opportunistic way, given the current situation, to expand your services and also quick hire sometimes. But I think that we will see after this crisis will be over, because it will be over, that who has the strongest ammunition will actually grow faster. So if there is a silver lining in this crisis, in all crises, is that there is a good way. It's a good time to disrupt the incumbents, and we will see who will come out on top. But the incumbents will need to watch out, because that's what crises do. Yeah.
So probably, do you think that it would be the one that has the longest cash runway and the most and the one that are most capital efficient, and is, in a way, it's good that we kind of all agree, and let's see if Vasile also agreed, that there is a trend of M&A activity that has increased in this ecosystem, right? And I think we're gonna spot the one that they're becoming more capital efficient, on they were capital efficient to start, more capital efficient than the others in different jurisdictions. I mean, because they're different in different jurisdictions, right?
Oh, Vasile, you're on mute, I think.
Sorry, yeah. Just to add to what Donatella is saying, is that there are so many already compliance and RegTech solutions. So there is also a push to consolidate, so the compliance manager is not managing 40 applications. We've seen this in cybersecurity. For example, when you talk to Chief Information Security Officer, I mean, they already see 50 cybersecurity products installed, and they have to run all of them, and they get so many alerts. So there is this push to go for one company that can manage 5 of the products. So ideally, those 5 products should be within the one organization, so you don't have to manage 40 different solutions. The same is for the compliance, because you have, again, so many solutions that are required. So again, to make it easy, faster, cheaper. So eventually, it's almost like undeniably it will be consolidation play, because the companies, as the users will want to have 5 providers rather than 40 providers.
Yeah, I couldn't agree more. Jay, your take?
Yeah, my take on that is I think the consolidation is inevitable, and the consolidation is happening or will happen because initially we had a lot of GRC providers which pretty much offer every single module and big risk management platforms, and there are maybe 4 or 5 incumbents on the market, but from what I know, the implementation of a GRC platform is a 2-3 year project for a big organization, and it never ends. So a lot of companies on the market in RegTech are addressing parts of what GRC vendors are doing, the incumbents. And a lot of them are doing it so much better that a lot of companies are accepting that these little tools are not talking to each other, but they're the best of breed of what they're created to do. And now it's a very similar situation where a lot of companies have point solutions, a number of point solutions in different areas of compliance. I've got AML, KYC, I've got fraud detection, I've got transaction monitoring. These are all different systems. I've got policy management, risk management, issue management, and all of these are not linked. So we've seen in the last 6 months, actually, a number of PE firms came out with compliance thesis, consolidating a number of players. We have seen quite a few larger GRC players even looking to acquire solutions which are replacing their modules. So because that's what a lot of customers are asking, you either integrate or you look at how we can consolidate this, and investors are looking at this. So there are investors who want to participate in this consolidation. And there are larger incumbents which are now in the economic downturn are trying to see if they can get good companies for not stupid valuations.
Mm-hmm. And I think then I think we can safely say that we're going to see quite a trend then in the next 12 to 18 months on that front, right? On the M&A front. And just a little bit of a cheeky question. Coming from the M&A discussion, do you have an idea? Do you have a speculation that we can just point the finger at you 8 months time and tell you, yeah, but you said that. So, no, I'm joking. I would never do that. In terms of who would be prolific buyer, for example, who do you think in the ecosystem is more likely to take that lead? Obviously, if you don't feel comfortable to give names of company, let's just give me an idea. So, what do you think?
I can start.
Your idea. I love to hear what is your prediction. I like predictions. I don't know. Maybe I'm Italian too.
It's not a prediction. I think I'll just probably kickstart. I think Jay already mentioned, and Steve as well, that there are a lot of private equity players. So in the last 10 years,
I didn't like that. I hope it's not going to be a PE play. I was just hoping to hear some big names that are just... No, sorry. Go on. Yeah?
No, but of course there will be big names. But I think just one example, for example, Thoma Bravo's, they just acquired for 2.6 billion bottomless technology, which was the largest RegTech transactions in the first half of 22. We know them, they're very aggressive sort of private equity shop, spending sort of billions on acquisitions, putting them together, and then IPOing them later as a consolidated business. We've seen them doing this in cybersecurity space. They recently bid it for Darktrace that was listed, our portfolio company is listed on London Stock Exchange. So I think this is just an example of the large players from the private equity arena to consolidate companies in that space. And I'm sure we will see also the big corporate players in that market as well, as Jay mentioned.
Okay, so you think that sort of would be more a PE play for a while?
I think, back to my notion of a couple of stages, when you're probing for, who needs cash to keep their business going, and you're, consolidate. I'm going to choose roll up instead of consolidate as my term of endearment with regard to that. I think that that first stage is let's see what we can put together where the sum of the parts is greater than the individual parts, right? So I do think that that's the first stage. But then to your question about, well, look, will there be big players? Well, yeah, of course there will be big players because, frankly, they have to fuel their growth, right? As companies get bigger and bigger, it's harder to drive consistent growth at the same percentage rate, and so you have to offer new things or better things to do it. And so now if you've got the balance sheet, it's the time to use that balance sheet offensively to drive your next run in a more comfortable economy, and so you got to be prepared for that, right? And so you want to be buying and integrating, kind of leading into as the economy starts to be improving.
Okay, thank you, Steve. Anything to I can't see Costa. Costa, you still there? Okay. Anything to add about sort of trends of?
Yeah, I think sorry, Jay.
No, I was going to say that we have seen already quite a lot of activity. Like, for example, OneTrust, which raised hundreds of millions, and they've done so many acquisitions. They're almost brand new player in the last 5 years in the GRC market. Logic Gate, also quite a new player in the GRC market, but also raised a lot of money. And I expect companies which have been growing quickly in GRC space and raise these mega rounds will start making acquisitions as well.
Was it GICO as well? I don't think we mentioned that as well. The raise 40 million, right? Seriously. Okay, so Costa, we lost you for a second. Did you want to add anything about trends and prediction and what you
on M&A? Yes, I think even though you don't like it, Donatella, I'm afraid that PE will play a role in the next few months, and I think also
I like to be controversial and see.
Yeah. So on what Vasile said, Thoma Bravo, but also Blackline, I think they bought 4Q. But also big companies, as I said before, Mastercard, Nasdaq, they might actually go shopping for in the current climate in the next 8-9 months. But don't quote me on that. But probably PE they're good at spotting good opportunities, right? So.
I think so. I think we all agree on that, like it or not. Okay, so let's go a little bit more. I think we cover quite a bit of what I would love to find out about the RegTech today. So what about this question? So what type of GRC solution do you prefer investing in and why? And is anything has changed in the recent couple of years? And if so, why, and so on?
All right, I'll give you a quick. We've got my fund has a couple of different GRC investments, and there's just a bunch of different ways of solving the problem. Right? A system that simply consolidates process so that there's a single pane of glass is an interesting way. A system like Clausematch J, which is essentially kind of really advanced document management, right, for risk and finance and government and compliance. That's another way to get there. Kind of what we've noticed is that or what we've liked to invest in are companies that have kind of cracked the nut of selling to small and medium-sized enterprises, as opposed to, in general, I have no problem with people selling 6- and 7-figure deals. It doesn't feel like compliance is a 6- and 7-figure deal type of a solution. And so, what we have tried to find and what we've enjoyed investing in are different ways to solve the problem, and folks that have kind of cracked the nut on getting a decent amount of throughput, things through their sales funnel relatively quickly at a let's call it a 5-figure check instead of a 6-figure check. And we've seen some companies do that with great success, and frankly that total addressable market is quite large, and the need within those companies is quite large as well.
Thank you, Steve. Anyone would like to add on that? Otherwise, there are a couple of questions from the audience that I would like to address. Mm-hmm. And also, I've been, as always, I've been told I'm running late. So I urge anyone else from the audience to just put a question in, please, because we probably have time for another couple. Okay, this one we partially addressed as well, which is has this from the audience is has the RegTech segment been affected by the hype in valuation? We kind of address it a little bit, but not so specifically for the RegTech, right?
Yeah, I'll give you a shot at it. Maybe other people will have a different perspective. the way venture capitalists assign value is based on the velocity of growth, right? Which is, increasing at an increasing rate. And the multiple that you can assign goes up quite quickly the faster a company is growing. And so, while we are, I kind of referenced the West Coast being less valuation conscious, the East Coast being a little more valuation conscious, and right now Europe being most valuation conscious. We never want to get too aggressive with regard to that, but certainly if I feel like my payback, my time to increase in value, or my time to doubling or tripling revenue is relatively short, then I'm absolutely happy to pay for that growth. So the answer is, did it get affected? Probably not significantly more than anyone else, but hopefully in proportion based on the relative success of the company in driving growth.
Yeah, I think some sectors were highly affected by this, inflationary, valuation effect of the last 2 years. Payments, especially in fintech and many others. I think RegTech being a little bit under the radar compared to this bigger sector suffered a bit less valuation increase to the crazy levels of that we're seeing. So that I think will also mean that we will not see a crash in valuation. Of course, the whole B2B SaaS is actually suffering quite, a big drop in valuations from the public market. I think, Steve touched upon that before, and this will reflect, is reflecting in the private market as well. But RegTech, I think, has suffered less hype, and conversely will suffer less in terms of drops in valuation. That's my interpretation.
Has to be a good news then.
Yeah.
Vasile, do you see the same?
Yeah, I think, as I said, I think we looked a bit wider the RegTech, because we're now RegTech. We have cybersecurity or ID verification portfolio companies. We have tax automation software solutions. We have solutions that are related to the supply chain management. So all of the sectors actually have quite different valuation metrics. And for example, to some extent, I agree with Costantino. I think most of those companies are selling their services as software as a service. So if you have what Steve mentioned, so high velocity of sales at the same time, all the usual SaaS KPI metrics in terms of net growth, retention rate, you have, let's say, high margin business, you have 3 to 4 year contracts. If you have all those sort of right KPIs and you're in the tier one, you're probably just performing as the tier one SaaS sort of valuations that have been sort of multiples in the market. So again, there is some, of course, effect from what's happening in the public domain. So we've seen the valuations probably going down by probably 30, sometimes 40% from the sort of November/March numbers. And again, it comes in tiers. So tier one went, let's say, from 17 times to whatever, 13 times. And I think tier two type of companies went from 10 times sales multiple, ARR multiples to 7. So I think there's this shift. But again, you can't just apply them across all the companies. They are sector by sector specific. Some sectors, for example, like cybersecurity, is a bit more resilient. RegTech is also quite resilient, particularly within the compliance segment, because as we discussed, I think people still need to have the product. So I think it's a bit more sort of less generic, put it that way, when you look at the valuations. You need to look case by case.
Yeah, definitely. Now, I would add here there are a lot of investors who will try and reduce valuation, and we had these talks recently. Because
what do you feel, Jay, that they try to bundle everything in one? When suits them, they try to bundle. Yeah, but valuation is down, so should be that, and then they forget that they actually are RegTech, building a RegTech company, and by definition, because now we know we had the definition in this panel, you are more resilient, right?
Yeah, definitely. It's trying to pull this together and saying, okay, well, we expect that there will be a slowdown in growth, and we're seeing the valuations dropped from over 10x multiple to 6x multiple. So we should be talking about a drop in this value, about a drop, but then you start talking about, well, actually, RegTech and compliance solutions are very, very sticky. To give an example, our gross retention revenue is 99%. Net retention revenue over 110%, and our contracts, most of our contracts are 3-year contracts. So the growth matters, the recurrent revenue matters, but you can also show that your total contract value is 3 times of your recurrent revenue. You are going to grow just purely from your customers, and your customers don't leave the solution. So it's a very resilient offering to the market because even in downturn, and you don't expect, even if you slow down in your growth and sales and velocity, you're still a very resilient company where you're not going to see churn, you're not going to see clients reducing how much they're spending with you and actually continue increasing.
I have to agree with you, Jeff. Okay, so I think one just super mini one, because I have my colleague really, she's going to shoot me in a second because we are over time for this panel, and we should move to the next one. But just to complete the discussion, we were talking about another question. I think we mentioned quite a few. We touched the emerging B2B SaaS categories, the emerging B2B SaaS categories for 2023. And anything else that you think it would be a trend that is related somehow to RegTech? Obviously, we discussed the different segment to it that we forgot to mention, that we should mention on this panel that is relevant. Anything else that spring to your mind?
I don't think so.
I would just quickly add one small point. I think when we're discussing the main drivers, I think one of the drivers, I think maybe Steve mentioned about this behavioral part of it, we call it Amazon effect. So for example, RegTech is not immune to the Amazon effect. So where companies must adopt to improve their operating models, to make better services. For example, we've seen people adopting all these fintech B2C brands like Revolut, Monzo, others. I mean, onboarding Revolut takes, 3 minutes? Yeah. Because all the compliance and RegTech solutions, they automated using, for example, Onfido as a verification solution. So they verify you within 5 minutes and then do the compliance checks and anti-money laundering checks within probably another 3 minutes, and you have your account open. I mean, people already used to the fact that they can onboard those products fast without paying, and very sort of usual Amazon type of effect. And these requirements will be pushed across other products. This will drive all the companies that don't have those capabilities to actually start onboarding those solutions and opening it up. And the second big driver we also see is just all consumers became super connected with super powerful computers they have within iPhones and latest Samsungs. So 5.5 billion people, and 5 of those have a phone, and 4 billion have a smartphone. So we're connected. So as a result, all the data has to be regulated, because who has the data on those consumers, what they're doing, what they're reading, what they're buying, how they're onboarding. I mean, this will all seriously impact the way RegTech and compliance works.
We couldn't finish on a better note. Are we all agree with what Vasile said?
Sure.
Yeah.
Yeah. Okay. So I can't thank you enough for your time today. So I think it's been extremely helpful, and for you to share with us your knowledge about RegTech. So I thank you very, very much. And hopefully we can do this again, or we're going to pick another subject. And I would love to have you on Saas Lounge, and I'm sure Jay also you are super happy with our panelists. We had, I think we managed to do a very good job, don't we?
Definitely. Thank you so much, everyone.
Thank you.
Thank you,
Okay,
everyone.
so
Thank you.
I think Jay, you stay on for the second part, and I say goodbye.
Yep.
Thank you, grazie Vasile, grazie Steve, grazie
Thank
Costa.
you.
A
Grazie
presto.
mille. Thank you.
Ciao.
Thanks, everyone.
Cheers.
Ciao.
Cheers. Bye.
Okay, here we go, Jay. We have our second panel. So I think we need to get Melanie. Hi, Melanie.
Good morning, good afternoon, good evening.
That covers the lot. I like that. So we had a very good and busy first session. So we are super excited to get deeper into our discussion on RegTech, and for the sake of our audience, well, you know, Jay has been, with me on the previous panel, but we would like to introduce Melanie Wright. We're very lucky to have her as our regulatory compliance expert from North America. Thank you for being with us, Melanie. And,
my pleasure.
And then we have Shtefanets, which is our super expert VP of product at Clausematch. So I envisage to be quite an interesting discussion now. Okay, so let's get started. Just bear with me a second. I don't. Hold on.
Donatella, while you're preparing,
Yeah.
I guess it would be great if Melanie, do you want to just tell us a couple of things about yourself and
Yeah.
Sure.
Yeah, thank you, Jay, for rescuing me. I mean, my Wi-Fi just let me down on what was going on. Yes, obviously that was my second thing. Yeah, please, guys, if you don't mind, to introduce yourself to our lovely audience before we dive in. Thank you.
Sure. Thanks, Donatella. Thanks, Jay. So I am located in Toronto and actually native to here, born and raised here. And I kind of fell into regulatory compliance by accident when the heat started growing with regulatory stuff in like 2010, 2011. Because ultimately at the heart of regulatory compliance and compliance of any kind is problem solving. So I'm a natural problem solver. I want to get to the heart of the matter. And so it's morphed into my career 100%, and I'm involved in lots of stuff in the FI world. This is not my first bank, but this is the first time I've been involved in. With my current employer is the first time I've been involved in regulatory management 100% of the time, and have been doing that now for about a dozen years.
Thank you, Melanie. Jan, please give us a brief introduction about yourself.
Yeah, I'll be short here. So my name is Jan. I'm actually a VP of product at Clausematch, and mostly was involved in designing and developing the core technologies behind the Clausematch. And actually, my passion is trying to understand the root problem that we're trying to solve and help our clients and make the solution as simple as possible, so everyone could start using them and get the benefits from our platform. So it's about me.
Thank you, Jan. But it's me moderating, so you can go over time. It goes by definition.
Okay.
So anyway, I'm giving a name to the Italians, not good names. but we are always late. So let's, is a true cliche. So, okay, let's start.
Jan is being modest as well. He's also, before Clausematch, he's a serial entrepreneur, and he launched a number of businesses before joining Clausematch. So he's not just bringing the product experience, but also, you know, the big business acumen and actually how do you implement product, you know, with a business value for our clients, which is really great and invaluable for the company.
Thanks, Jay.
Come on, Jan, you can't be modest now. It's a panel. We want to know everything.
Okay.
Okay, so let's dive in with the first question. For probably Melanie and Jay, I would say on this one, and probably Jan as well. So, what are the reasons why companies buy regulatory and compliance solution now? Why now?
Because if you have a hope of surviving the avalanche, you have to do something. So the regulators never sleep, and I think it's related a lot to the topics in the first conversation, that this is a growth industry. Honestly, the regulators are taking their direction from government and from world events and from things like what was talked about in the earlier session about, you know, cybersecurity, cyber risk, breaches. We can no longer, no matter the industry you're in, whether it's healthcare, whether it's hydroelectric generation, whether it's some form of financial services, you can no longer avoid regulation of some description. And the larger you are, the more eyes are upon you from the regulators. And so the old way of doing things manually and relying on the subject matter expertise of a few people that have worked for your organization for, 25 or 30 years, that's just not going to cut it anymore. So there is a real need to digitize that regulatory management role, multiple roles, because it goes across all of, many, many silos within your organization.
Yeah, we can totally see that. And I think just driving from what you just said, Melanie, what would you say, for the sake of educating our audience, what are the areas of compliance that do apply regulatory technology in your experience, previous and now?
So, like what areas within companies?
No. What areas of compliance do you apply regulatory technology to? So
if you want to do it well and do it right the first time, you need to do it across the entire value chain. So if you're building the taxonomy for how to prove you're compliant with regulation 123, you really do need to break out of the mindset of the siloed line of business thinking and get up to, okay, across the silos, cutting across cross-functionally to your functional partners, your operational folks, your line of business people. It needs to be employed and brought in at the right level so that you're bringing everyone along for the ride, because there's no point in trying to be compliant in this one area, because that's not the way it's done now. 10 years ago,
it's all
so 10 years ago, we were really focused on being reactive to one particular regulator is asking about one particular thing. And so operationally and tactically, you can provide that answer. But now it's much bigger, it's broader, it's cutting across multiple regulations, and you can't do it operationally. You have to start applying a strategy to how you're dealing with regulatory matters. And that means you need to employ strategic thinking around getting up from that operational and tactical level and looking to how do we solve for the now, but also anticipate what is coming in the future based on the direction that the world is going and the direction that individual governments are going.
Okay, so basically it all link into the adoption. So how much the adoption of RegTech has changed in recent years. So obviously increase for what you're saying, and that would be good if you can expand a bit more. And also how the change in the adoption of RegTech has taken place in larger organization, financial organization, and how complicated or easy or time-consuming or cumbersome that was or has been or is.
Yeah. Yes. So sorry, I guess I lost the plot a little bit there, so I'll try to course correct.
No, in terms of sorry, it's me talking too much as always. So now let me just tell you the question again. So how has RegTech adoption changed in the recent years, and how have you seen RegTech adoption changing in large financial institutions?
It used to be, we're going to solve this for our immediate problem, and so we're buying this piece of this software's offering, but it's not going to talk to any other pieces. So then you have, group B come along and they say, oh, well, we're going to purchase this piece of another vendor's software because that solves for our problem. So that's how things were done 5 years ago. Now we've hit a fork in the road where all of these little individual pieces, they solve for problems, individual problems at a point in time. Those are not solving for the problems now, because again, it's to the point of you can't be managing regulatory compliance in silos. So, the buying this piece and that piece and not knitting them together and not having them talk to each other and not having them provide any kind of value add reporting, you can't maintain and be able to move forward with your regulatory compliance management in that realm. It's got to now come up a level and be interconnected.
Yeah, because it sounds that it's never going to be up to date if it's done that way. So,
right.
It defeats the purpose, right?
We're always going to be playing catch up because governments continue to move forward.
Yeah.
Yep.
And let me just, sorry.
I was going to say, there is a lot of support for that, in what the regulators are doing as well, because regulators are seeing that point solutions address specific compliance problems. You've implemented something that is monitoring your transactions. You've implemented something that is, doing AML KYC, and you've got your regulatory obligations and controls managed by these point solutions. But what you can't expect is every employee to have access to every single system to understand what the organization is expected to do. So regulators now are saying is that, your compliance should be global. It should be dynamic. It's not enough that you have a document which tells the employee what to do. That document needs to be dynamically updated, related to the relevant regulations. That document needs to be. You need to track engagement with that document. You need to know that the employee has read it, and you need to also prove that, have evidence that actually what this document says is what you actually do. And that's very difficult when you've got 100-point solutions addressing different compliance problems, and there is a perception that we have addressed that compliance part of the, that part of compliance, but actually a person who is sitting next department over is doing the same thing, but they don't have access to that system, and now they're not compliant. So that's why there is the harmonization and standardization that is being asked for by regulators. Department of Justice, they are now issuing and updating in the US guidance on compliance programs, and it's very high level. It needs to be linked and mapped and dynamic. In a lot of countries now, there is senior managers accountability regimes where senior managers are actually personally liable for failures in compliance, and that drives also this elevated way to manage compliance because senior managers don't want to go to prison.
that we all agree. So okay, so we addressed that. Let's see. Where do you rely on automation? And what has become a need to have rather than a nice to have? Don't tell me everything.
So I think it's quite basic. It's right. Just starting at the alert, like you have to do this. So annual or semi-annual attestations of your that you've completed this series of documents that are related to a compliance framework. So building that kind of you can't pass go, you can't collect $200 until you have completed this checklist. And by the way, if you don't do it by 10 days from now, then the messaging goes up to your manager and your manager's executive and your executive's executive, et cetera. It's kind of a beating mentality.
Carrot and stick, or only stick?
Well, there's really not a lot of carrot, so it's mostly stick. And so unfortunately, it gets a bad rep because people are like, oh, I really don't want to do this. But before there was any kind of technology around regulatory compliance management, it just didn't get done. It didn't, or it was done on paper with no tracking.
Not tracking.
So now at least we have automated the, thou shalt do processes. But there's still a long way to go because there's lots of companies that don't even have that. So I think it's depending on how much skin you have in the game.
Yeah, and within your organization, how much do you rely? I mean, I would expect that you make sure that you rely a lot on automation, right?
So because I'm a victim of it. I'm a victim of it. I'm not terribly fond of it, but I do see the value in it. So I'm generally on the receiving end of the big stick as opposed to wielding the big stick. So, but yes, the larger the corporation, the more reliance there is now on those kind of automated pressure points to force conversations, to force verbiage being entered into systems around how things are being achieved and whether, okay, so for instance, model risk management. So lots of AI models now in play across many different systems. So we have a very robust model risk management protocol where every 6 months, those of us that own the certain models, we must attest to the validity of that model, to the test results of that model, and what security is around that model. So that's a very, very recent and very topical example of the way in which automated structure is playing a part now in compliance management.
Yeah, I think there is no other way to make sure that because it can never be 100% automated. So you can automate as much as you can, but still required to be diligent, right?
Right, exactly. And so it's forcing the diligence.
It's forcing the diligence. Yeah, exactly. I would have said so. So, and what we have now, Jay, why is why do you think is regulatory change management a good thing to invest in? I'm going to make you into a VC now. So tell me.
I think generally it's been one of the biggest pain points for a lot of organizations. How do you manage regulatory change? Vasile mentioned earlier on the panel that it's annually you would get 50,000, 60,000 updates a year if you're a global bank, and it's just not possible to deal with that level of information coming into the organization. And there are companies which are now tracking the updates to regulations, but at the same time, we're still seeing that. Well, there are a couple of issues there. These companies do not cover every single regulator, so you still need to rely on several sources. And what we're also finding is that even with a solution in place, a compliance officer still spends 15 minutes every day on a regulatory website, making sure that the solution hasn't missed something from the actual source. So that part has been challenging for a lot of companies, but it's changing. There are solutions there which are tracking regulatory updates better than others. But I think that's the first piece of the puzzle. And the second one, how do you translate that regulatory change into the organization? And that's the difficult part. If regulatory change data, if regulation data is not digitized, then you cannot programmatically or with technology implement it into the organization. So there is a lot of work going on now on actually linking regulation to internal policies, procedures, processes, and then ultimately linking that to the actual systems which are enforcing the controls. So a simple example, if I've got a standard in cybersecurity which tells me I need to do regular backups, and my policy says my backups need to be done on every 24 hours, how do you prove to the auditor that this is happening? Well, one way is ask your DevOps person, once a month, can you give me a screenshot? And that's one way of doing this, of our backups being done. Another way is connect directly to the AWS environment and set that if this field is less than 24 hours, you're compliant with this. And then you've automated, this control. And you can do a lot with, with automation, but it needs to map back to the regulatory source. So if the regulation changes, you know that you need to change your policies, your procedures, your controls, and then ultimately the system which is enforcing that control.
You're muted, Donatella.
Further, so you see that I'm talking because my hands are moving, and as a good, Italian would do. Okay, so what you just said, Jay, probably leads to my next question. So, which is how can AI sort of solve or help solving the compliance challenge?
So I'll start. There's the top of the regulatory pyramid is your actual regulations. No matter what jurisdiction you're in, the top of the heap starts with what is the law saying you must do. So there's common language and common themes in those regs that need to translate to your policies, because the policy is what needs to be done. Your procedures are how it gets done. So that common language, AI is a perfect way to employ your yes or no. Either yes, we do touch on this, or no, we don't, and therefore you have an action item. So AI is a great place to start with respect to ensuring and strengthening that regulatory pyramid, because it's a flow down, it's a waterfall down from the top of that regulatory pyramid. So you then can start to employ the use of standard language and language themes in the way in which you are building your taxonomy for your compliance management. So I'm massively oversimplifying, but AI is the way to do that, because essentially you have to look back at, okay, pre-internet, we did this same thing, but we were all using our brains and we were relying on one or two subject matter experts in each of the areas. Well, what AI is doing is essentially taking that human thought processes and digitizing it. So the AI component is really very beneficial to being able to plow through, as the first panel talked about, being able to plow through those 50 to 60,000 regulatory updates and changes on an annual basis.
Yeah,
okay, and then now, Jay, you can go more technical on us and tell us, also how, from your point of view.
Yeah, definitely. And I wish, there is one point which I wish was happening, and it could help speed up the adoption of AI in this, and that is regulators publishing regulations in a standard format, in a structured format, because that would simplify the industry, I don't know, 1 million times. But it's not happening. So we are starting to apply AI first to read documents, regulatory documents, and identify where actually the breaks are, where the different paragraphs are. Then the second point is to start identifying the themes in these regulatory documents. So this document and this paragraph talks about anti-money laundering, enhanced due diligence, and so on. So that's the second part. And there are things which are doing that now. The third part is actually specifying that a specific part of this document is an obligation. It's not a guidance. It's not, a descriptive part of the regulatory document. It's an actual obligation. So once you have these obligations, then you can really start saying, okay, these are important. So here is my universe of 3,000 policies or 5,000 policies and procedures in a bank. Now I can start identifying how they relate to these obligations, and that is, it's possible once you've got the first part, but also it's an eye-opening, because we've run recently models on this specific data, and the eye-opening part is that it's so interconnected that you end up with 50, 70,000 connections in the organization, and it's all important data which is interrelated. So imagine if a change actually makes an impact of 10,000 impacts in the organization. You didn't know that before, so now you know. And then the next iteration of the AI, and that is where we're moving, is actually identifying, okay, we have contradictions in these two paragraphs, so you definitely need to look at them. And these two are aligned, so you don't need to look at them. So really reducing that number down. And the next one is already today AI can understand and identify answers to questions. You know how you in Google you can type in and how far is the moon, and the Google will tell you exactly how far it is, because it identifies that answer in the text. So you will be able to say, can I take a gift of $100 from a third party? And it will tell you, no, you cannot, because your limit is 0. Or it can tell you, maybe in these circumstances. So rather than calling an expensive compliance person asking this question, you can just type in the question and get the answer immediately. So, and you wouldn't believe how many questions compliance departments get on an annual basis. Because another problem is that if you ask a trader on the in front office, have you read our policy on X? And they will say no, and I have no intention to. So we need to bring compliance in a much more digestible way to employees, for them, to actually answer their compliance questions and I guess make it more digestible. And I think that's ultimately we will get there, but there is a lot to do in AI.
I think it's very interesting, and I think it's the way forward, but it's also very complicated because, again, I'm not an expert by any means, but I had my previous life. I had a little bit of experience in compliance, trust management, so a lot of it is subjective. Mm-hmm. So it's not everything objective. And that, I think, is where, and please tell me, don't tell me you're absolutely wrong or agree with me, I don't know. But this is what I feel, where is the difficulty lies. And what is your opinion? Is that, how do you manage even with AI, to cover all the subjectiveness of compliance at times?
I can only, my only answer, at least in my head in the moment, is that we don't even know what is compliant and what is not. From the machine point of view, the machine doesn't know that this specific paragraph in this policy really addresses this specific obligation in the regulation. So, but from what I'm seeing, we're now collecting that more and more of that data, because once you have digitized that data, connected it, and then ultimately we will know, someone will certify this is compliant, and then the more of that data you have, the better prediction the machine can do of, if it's drafted in this form, it's compliant. If it's drafted in this form, it's not compliant or partially compliant.
Yes, Jay, but the reason why I mentioned that is because I was drawing from what Melanie said before, and we know she's right. There is an ever-changing environment. This is why I was like, it's a battle that I think is always going to go on and on and on, and it's ever changing. Is it ever gonna be? Are we ever gonna? Now I'm going totally sort of off the board. But are we ever gonna be know that we are totally compliant and we can take this into forever? Probably not, because
so I think it's more to the point of, we're never going to be able to have compliance management completely rely on tech. Tech will be a major component, but we still have to have the human interaction to set the guidelines and establish the guardrails for the technology. So I would like nothing better than to be able to push a button and, whatever system tells me, oh yeah, this applies to these policies and you're compliant here and you're not compliant there, and here's a report. Would love that, but that's not ever going to happen without the human to start the process, to say, hey, we got vague guidelines from regulator ABC, and we got some clarity through law group, but we have to go back to the regulator for more information. They're not going to give us any more information, so we're going to, on a best efforts basis, this is how we're going to establish this, so here's the obligation that you need to follow. So I think that's the reality, that there will always be a human factor, but just the sheer volume of changes and new things that are coming our way, we have to have a very buttoned down, strong and rapid technology infrastructure to aid that process, because we can't all do it in our heads anymore.
I couldn't agree more, and I think we're all on board, guys, on this. it's always going to be an element, and I think it's right. It's right to be, but
Yeah.
Tech it would be like the most, probably one of the most important of it, and that to assist the compliance manager, director, you name it, and probably going to make it more fulfilling, because then you'll have a lot of tasks that you don't like doing that hopefully tech can take care of. Jay, what do you think? Or Melanie, do you agree?
Yeah, absolutely. Like, there's the low value of any role. The sooner we can leverage technology to help with that, then you free up your key people and your key decision makers to be looking at the strategy more, because they know that the nuts and bolts are being taken care of by your technology solution.
Yeah, it is where I was going to.
Yeah.
Jay, I hope you agree, because you're building this. So
absolutely. Yeah, we built a way to manage compliance content. Now we're building the integrations with that external content that influences your compliance program. So your regulations, your obligations and controls, risks, which are managed in different systems, but actually are important for a person updating a policy, updating a procedure, and then, automating as well the part which will help you address the questions from employees. Because questions come up exactly just before an employee is about to do something, right? And the answer to that means, are they going to do the right thing, or are they not going to do the right thing? So it's bringing that context data, whether you are answering a question or you are showing them the compliance data, compliance content at the right time in the system where they work.
Okay, thank you, Jay. I guess what? I'm running late. So again, but it's interesting. So it's fine. I mean, who defines times anyway? We do. Okay, so okay. Let me ask you one more question, because Jan has been super patient. He's got a fantastic presentation, and he's been just waiting for us to blab away. So please, one more question, Jan, and then the floor is yours. So let's, well, Jay, I mean, this is a question that you would expect me to answer anyway. So can you update us on the recent traction, and where does the revenue come from? Has it changed the company vision at all? Just finish off with something fantastic.
Yeah, so we had quite a few milestones in the recent couple of years. We were extremely focused before 2020 on Europe, so UK and Europe. But in 2020, we very rapidly expanded to North America. We had 4 large global financial institutions becoming customers in North America. So we established our operations there. So actually 40% of our revenue comes from North America today, which was great. And growing internationally has also given us that global compliance view as well of what a global financial institution needs. But recently also we have seen a lot of traction coming from smaller financial institutions in mid-market. And what we define mid-market is up to 5,000 employees. But while before we didn't see companies of this size looking for solutions, now a lot of them are looking for solutions because they are part of the supply chain. They're part of the value chain for large corporations and organizations, and they're asking them, how are you doing your compliance? So it's not just for the big guys anymore, big companies anymore. It's for every small company which is part of that supply chain. And that has been great. We've seen mid-market compliance platforms growing very quickly, and we've grown this segment by 200% in the last 12 months. So it's been a great development, and a great milestone for us. But also what we're seeing is that compliance is done exactly the same, if you take it at a high level, exactly the same in large organizations and small. What you need to identify your obligations, you need to write a policy, you need to make sure that there is a control, and you need to provide a way to track compliance, so evidence that compliance. So this is at a very high level, but there might be complexities in workflow, the stages, how many people are involved in large organizations, but in essence, compliance, whether it's a bank, whether it's a manufacturing company, whether it's pharma or a small software provider, it's the same.
And then what about his ECG? They just keep killing us, everybody. So this is another. It's required that sometimes you're like, okay, but are we not too small for this? And I'm like, okay, let's write the policy, so on. And actually lead me, and this is important because it leads to Jan presentation. So what are the common, and also please, Melanie, step in on this one as well, because you probably know definitely more than me. What are the most common application and use cases in compliance? So what type of solution are used? What makes them essential for operational benefit? So that'll be nice to see from from the CEO of a RegTech company, and also from a user, essentially, right?
I'll let Jan go first.
No, it's I think it's for Jay, and then Jan is gonna tell us gonna do the presentation. So I think
I will just summarize everything.
Oh no. Okay. So should we just lead? Basically, Jan can just lead us into this, Jay and Melanie. What do you think? I think you're right. Your presentation pretty much will. Is in terms of
just to set this.
Yeah.
Just to set this.
Jay, help me out here. I got lost here.
Yeah. Everything that we talked about today, but we wanted to end as well to show some of the parts of the vision for Clausematch and how we are solving some of these issues that we talked about today, and why investors are excited about what we're building. So I've asked Jan to show it to us, some of the things that we're working on, and we're certainly very excited about the developments.
Okay.
Thank you, Jan. Yes, tell us.
Yeah, I have microphone right now.
Now we can hear you. We can hear you. Okay, can you hear Jan? Yeah, I can.
Yeah. Super. So I will probably not spend more than 5 minutes on this thing.
No, I want you to talk, Jan, please.
Yeah, I'm going to walk you through the logic of our product vision and product development as one of the present day examples of where compliance is heading to. But before jumping on some our thoughts around the trends, I just want to run through our previous milestones. And yes, actually, policy communication is at the heart of our product journey, and it has already increased our user base by 48% and help our customers distribute their knowledge and collect evidence. And there has been several key changes in this area that we added to the project just recently, so you can see them on this slide. Also, these changes had double the level of engagement on the platform, and they also allow us to deep dive into policy communication use case and try to understand and research the needs of our users. That also led us to present some advanced capabilities for discovering the content. And generally, this bits like policy communications and policy development are closely interconnected. And we also increased the level of engagement with policy documents and allowed our clients to work efficiently across jurisdictions on global level, on global policies and local policies with introduction of addendums. We call this functionality modifications. And as recently we discussed during this year, we also presented several AI capabilities that help to minimize the content repeatability by discovering connections between content. And returning to these trends, so we think that policy communication process is going to be one of the key directions, and it will be important in the future. And more importantly, how employees can consume this information. So just Jay mentioned, we saw that the people don't read policy, they do not understand them, and it's actually difficult to them to follow all the obligations applicable to them. So we see a growing demand in this area, and generally, like, allow employees to find the answers and not just policy, help them to follow the obligation without having to read the whole document. And even integration with other platforms leads to a totally different level of interaction. So you could actually just reading, just not reading the policy, you could just getting an answer from the system. One actually not necessarily being on the system at all. And on the other hand, policy owners and editors do not receive this feedback that could help them improve the content, the structure of their content. So changing the way how people consume the content and giving insights to those who create the content, we think is crucial. So we ask ourselves, what if we imagine how people can consume this information, and how could they collect insights? So how could this all change the way how people work? This also led us to the second big things. It's around change management and around how we work with these changes from regulations. So generally the number of regulations is ever increasing, and their complexity is as well. So companies looking to make their compliance process and even managing compliance data more efficient and transparent. So if we will be able to connect all this compliance data to understand the interdependencies, this will allow us to answer these essential questions like, how does it impact me? What do I need to adopt? And like, what I just generally need to do next. So, and this AI, it could start helping us by transforming unstructured data that we have in all these documents into more consumable format. So we could easily identify relations and connections in this compliance content. This actually lead us to, like, if we have these connections, this could help us to keep an overview of the things and support their employees in the change management process by helping to keep track of changes, helping to do even impact assessment and even, I don't know, gap assessment. So, and the question that we have is, what if we provide a possibility to track and trigger these changes, both external like regulation or even internal, and have an opportunity to adopt them easily by providing some like capabilities to execute and adopt these changes. So, and one direction here, we think that we could digitize compliance content and connect the dots actually with the help of AI. And finally, what we see is the demand is in this area, this automation area, and we know that companies growing, there are multiple routines and small tasks that also started multiplying, and this actually impacts the way how customers structure their process. That's also mean they need to keep everything consistent and up to date while required to complete some repeatable tasks and keep this stakeholders engagement. So what if we remove this necessity for any of these things, and we could actually, as a result, people will have an instrument to manage this complexity by themselves. And actually, it's related to their different maturity levels. And this also could help leverage the amount of work is required to complete and reduce number of errors. So that's actually these three trends that we see for nearest future. And that's it from my side.
That's great. Thank you, Jan. That's been really, really helpful. And I have two questions from the audience. One is for Melanie. So, does any solution currently on the market offer a one-stop shop to fit the financial institution compliance regulatory needs?
Not completely out of the box, but that's easily solved because, you know, the APIs now have come a long way, and every FI is going to have a slightly different need because of the way in which internally they're structured. So there is an out-of-the-box solution that will solve for 95% of your issues, and you know, myriad APIs will solve the gaps in that remaining 5%. So yes.
Yes. And also have another one, but probably you touch it earlier. Let's see if you fancy to expand. So where do you see the biggest hurdles in adopting RegTech technologies in global financial institutions?
It's the silos. So we're not good at working cross-functionally at the enterprise level. We have been so focused on revenue generation in a particular silo that breaking that apart, because now, you know, we seem to have gotten to a point where we've solved the regulatory problems at the operational level. Well, now strategically, if you look from a client perspective, so any money laundering requirements, it doesn't matter whether I'm wanting a credit card or whether I'm opening a bank account. AML crosses all functions and products. So does privacy. So does accessibility. So does ESG. It's no longer product specific. It is client focused now it's the big pieces now. So that means even more so your regulatory compliance outlook and framework and management needs to be at the enterprise level and breaking down those silos, because it needs to become product agnostic now.
Yeah, I think this is the way forward, right? And Jay, one thing that before I ask you the question from the audience, I think what we didn't touch base before Jan's presentation is that, which I think is quite relevant, is that you've been focusing quite a lot on the financial services in order to you know, for in terms of your solution for applicable to them, and also selling to them and so on. So, but are there any other industry that now we are in this fantastic platform that I think would be good for you to broadcast? And so are there any other industry that could benefit from that solution that you offer? And then I ask you the question, finish off with the question from the audience.
Brilliant. Yeah, as I mentioned before, it's the compliance is done at a high level, in the same way everywhere. So every industry which is regulated, or even not regulated, but has to follow some standards, like cyber, like data privacy, you know, they would benefit from the platform, because every company is doing it via Word documents and emails and you know, standard business tools today. So yeah, but us being focused, we kind of had to focus on the industry which is, I guess, hurting the most from the regulation, from the enforcement actions, and also from the lack of automation. So in this area specifically. So we are focused on financial services, insurance. We have a few clients in other sectors as well. For example, we've got a client in education, a client in energy. But currently, kind of from go-to-market perspective, we are primarily looking to sell to financial institutions and insurance.
Okay, thank you, Jay. And nice question. Maybe you just is a way to hire somebody fantastic, because I got this one. Is how do you attract talent and make employees excited about compliance and RegTech? That is a good one.
Job security.
That is a very good answer as well. Especially in these times. And yeah, so Jay, tell us.
Yeah, I would say, it's when you say compliance.
For a start,
Yeah.
Exactly. So yeah, sorry to interrupt.
No, definitely. But when you say compliance, right, when you say regulation, it can sound boring, right? But at the same time, when we start talking to candidates and we show them the technology we're using and the fact that it's actually very challenging to build what we build technically. It's a big challenge for engineers. When we present them the challenge, it's actually a great development, career development exercise, because after working at Clausematch, you are one of the top 1% developers in the world. And that is an incredible kind of benefit that we're highlighting. But then the second part is, if we're not just focusing and saying we're going to be doing compliance, actually where we're leading to is that we're making organizations operate safely and bring compliant and safe products to the market. And that's a direct impact on consumers, of financial services, consumers of physical products, because if we can make them safer by helping organizations to comply with standards and regulations, then it's actually making a safer environment for the consumer. And that is a much bigger vision than saying we're solving a document management in compliance, which is true. It's, we are solving a content and document management in compliance, but ultimately it leads to a safer operation of organizations. And that's exciting.
Exactly. I agree. And Melanie, would you like anything else to add on this? It's been quite an exciting panel. I'm sure we learn a lot, from our panelists and the audience, definitely. And hopefully you guys also enjoy, and it's been good. So, and I have to thank you, Jade, for co-hosting with Flashpoint. And thank you, Melanie, to be so kindly available to give us a hand and tell us about your extensive and valuable experience. And Jan, thank you so much for the lovely presentation. I think everything is much clearer for a lot of people with the slides, actually. And yes, thank you so much. And I hope the audience really enjoy themselves as well. And have a lovely evening, everybody. And I'm in Warsaw today. So goodbye from lovely Poland and fantastic Warsaw.
Thank you so much.
Thanks.
Thank
Bye,
you,
everyone.
Ciao, ciao.
Thanks, Melanie. Thanks, Jan.
Thank you.
Bye, everyone.